We think there's plenty of momentum in the Japanese market because even after the strong year it's had this year, the market's still pretty cheap. The PE on average, not that it's something that we hang our head on, is still between 14 and 15 compared to the US, which is more like 24, 25. You have the Tokyo Stock Exchange, the TSE, being the most aggressive activist in Japan and having made some very significant changes and affected a fair amount of revaluation through companies buying back stock, doing MBOs, or increasing dividends. And you also have a very strong economy that's been boosted by a weak yen. So if you go back further than recent developments, if you go back say 12 years, dollar yen was at under 80, was at 78. I just happened to look it up, and it's taken all this time and this amount of depreciation and declining interest rates to get the economy going again and to get some inflation as opposed to disinflation back in the economy. So it's hard for me to believe that that the BOJ would do something abrupt, even though Ueda has a habit of being surprising. But still, with the wage talks mostly in the spring and April or so, I would think that nothing will happen and that they will take a slow course towards changing the level of interest rates.
Not just Ueda surprising, but Kuroda-san too, right? No, not surprising. Yes. We're seeing the markets really hedging this chart on the Bloomberg showing that traders are paying the most to hedge yen volatility, at least since the summer when we saw the BOJ's policy tweak. But to your point on how the Japanese yen and a weaker currency has really supported the markets, not to mention those inflationary pressures, given that we may be pricing in a change from the BOJ at a time when the Fed's pivot is towards rate cuts. What is the risk of a stronger yen really dampening the markets in 2024?
So I think that the stronger yen will certainly dampen the growth prospects for exporters. But at the same time, it will make cheaper imports that they need for materials. So it's not as though it's all bad, but on balance, I would say it's not good for growth. And at the same time, there's a mitigating factor, which is that if you look at most Japanese companies' financials, they've actually factored in dollar yen weaker than where actually yen stronger than where it is now. And when we do our calculations for where we think the companies will still do well, we have a lot of room from where it is to appreciate by 10, 15 yen without doing too much damage to companies' prospects. On the margin, it won't be good for exporters, but it's not something that will derail the growth in the economy.
Belita, another Asian currency that has been really pressured lately has been the Korean won, right? Around 1,300 levels at this point. How much has that helped the Korean market? And could we expect more upside in 2024?
We're quite bullish on the Korean market, which I know is not a common view. But to us, Korea is very much like Japan was, with a 2-3 year lag in terms of its efforts to make its market more attractive to foreigners. So it used to be the case, it's the case, but it's transitioning, where as a foreign investor in Korea, you had to get registered with their financial authority first. You couldn't do your own FX except with the local banks. You had to pay taxes on, things that typically a foreign investor would be exempt from. And most of the Korean companies would have their reports in Korean, not in English. And recently, they've changed everything that I've mentioned so that it's more attractive and easier for foreign investors to get into Korea. At the same time, the Korean market is extremely cheap, has great companies that are ignored because they're chaebols, these conglomerates. And similarly to Japan, the biggest holder of Korean stocks in Korea is the National Pension Service, which has every vested interest in improving the returns on Korean stocks because they have to get better returns to pay their pensioners who are aging as well. So there are many reasons to think that Korea will follow the path of Japan in having better governance on their companies, which will make the stocks more attractive to foreigners. So I believe that there's plenty of upside, and we're just seeing the beginnings of the changes that will make a significant impact on Korea.
Belita, you mentioned the chaebols. Are you seeing more reform on that front with those conglomerates having very complex holdings of their company structures?
We are. It's, you have to look at it singly, one by one. We think that SK has actually moved quite made quite a significant headway towards improving their structuring. And we've even been invited to talk to their management about how they should position the company so that they're more attractive to foreign investors. So it's happening. It's happening slowly. And it's probably going to take many, many years, but I do think it's going to happen.